Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. Regular listeners to the podcast would know I like talking about data, simply because the incredible ways businesses are using it to make better decisions. My guest today does just that, but instead of using data to influence purchasing decisions, he's using it to lend money. Yanir Yakutiel is the founder and CEO of Lumi, an alternative lender focusing on loans to Australian small businesses. I thought it's a good opportunity as well to see what confidence is like in the small business world, where the government stimulus and tax write-offs are working to encourage investment. Yanir, welcome to Fear and Greed.
Thank you very much for having me.
So just how hard is it for a small business or an SME generally to secure finance at the moment?
It is quite hard, and luckily, the lenders like Lumi and others that are trying to fill that gap. I think historically, Australia, it's a global problem, but I think it's more pronounced in Australia, suffers from the fact that the Australian banks don't really lend to small businesses. They're predominantly focused on mortgages, and there isn't a debt capital market because of franking credit. And that has sort of a knock-on effect with the availability of debt capital to businesses in general. So, and obviously the small businesses are more exposed to that. Luckily, with a lot of fintech lenders like ourselves, that access to capital is constantly improving.
Okay, so just explain Lumi and exactly who the core audience is and how you do it.
So, as you mentioned, we're a lender to SMEs. SMEs is also a very broad term. Most of our clients would probably be towards the S in SME, so small businesses, typically owner-operated, possibly husband and wife or other family members or friend. Our loan sizes go from $5,000 up to $300,000 and up to 3 years. The struggle with SME lending, both on the small end and on the big end, is there isn't really sort of a concentrated groups that you call that are SMEs, right? If you focus on lending to doctors, there's a channel to lend to doctors. The same is true for dentists or accountants or cafe owners, etc. SMEs is very, very broad. Walk down your local high street and look left and right, and these are businesses. And they're also very different in terms of their profit margins, the competitive dynamics of the industries that they're operating in. And that's why you have to have so many operating efficiencies to be able to profitably underwrite loans to these businesses, which banks, for a variety of reasons, mostly because of legacy systems, just can't do it cost effectively.
Okay. So I think this is where we bring in the data part of why Lumi can do it. And it is around data, is it?
Well, it definitely, I always say, any decision that you make that's not on the fly is based on data, right? So first stage is to actually have the data, or to know that you need the data. The second is to actually have it in a way or in a format that is, you can use it in a meaningful way. And as you'd imagine, over time, more and more things are becoming digitized, especially business records, specifically for Lumi, given that we're a business lender and we predominantly fund businesses' working capital and cash flow. We're very reliant on the business's transactional and trading information. We can capture that information from the client in a digitized way, in a digitized form, and our system analyzes it, breaks it down, and comes back with a lending decision within a very short period of time to allow us to either approve or decline the credit application, as the case may be, in a very short and cost-effective manner. On top of that, we focused on the underwriting. There's also a lot of data that goes into both the pre and the post-underwriting part of the process. Which industries do we want to focus on? How do we see the economy trending? Do we want to be more exposed to urban areas, metro areas, Queensland, Victoria, etc.? And we're running these data sets and statistical models in the background all the time that basically inform and influence every decision that we make in the business. Pretty much every time we sort of want to decide something, the first question the decision maker asks is, show me the data. It's very much in the DNA of the company.
So is that Lumi's competitive advantage? Because there are other lenders out there. The fact that you can not only access the data, but what you said I think is really critical, you know how to use the data to make a decision. Is that where you guys actually think you're better than others?
Without a shadow of a doubt. And we've set this business up from day zero as a purely cloud native, fully digitized business. And that sort of feeds back to how we think about data. So we don't have legacy systems. Yeah. We have one unified system that has all the data that we have within the business, and we can extract that data for whatever purpose, whatever decision we're trying to make, whether it's an underwriting, whether it's an investment, an acquisition, as I said, whatever the case may be. Other lenders that use data as well, right? Like data is sort of digital gold, but it's really sort of building your business to be data focused and understanding the importance of data, and also having the people within the business that can analyze it. So we've got a whole data science team within the business that pull the data, manage the data, store it, etc. And we go to them when we need to get insights that are based on data.
Okay, so a couple of things. What sort of interest rates do you charge? Are you sort of competitive in the market? And then the other thing is, where's the funding come from? Where does the money come from?
So the interest rate is really dependent on the business. So we do risk-based pricing. Typically, we'd start at around 9%. Now, I want to contextualize that. Most of our loans are unsecured working capital loans. So, you got to sort of contextualize that.
Obviously a lot more expensive.
Exactly right. And types of businesses that are also riskier, right? Like we're doing, cafes and small shops, etc. That banks typically wouldn't lend to. So that's really the interest rate, the start of the continuum, and it can go up to 20% to riskier businesses with other attributes. Our funding so we securitize our debt.
Right.
We get wholesale funding. We actually got a warehouse funded predominantly by NAB late last year. There was a fair bit of that in the press. We're actually the fastest fintech lender in Australia to go from launch to Big Four funding. And I think the fact that we get funded by a major bank sort of is recognition on the side of the bank that, we have a competitive advantage over them on the front end and the customer acquisition, the origination, the underwriting, whereas they have the advantage as a utility provider, essentially the provider of capital on a wholesale basis.
Yeah, so just so I understand this, and I think the fact that you do have a big bank providing a warehouse facility, it's a sign of success in many ways and a sign of approval. But what you're doing is packaging up loans, you're selling them on to investors, which is obviously raising money, but there's a facility there funded by NAB, which allows you to dip in and out to take money in and out of.
Yes and no. So we're securitizing our debt. We haven't termed out our debt yet.
Right.
And first and foremost, we also hold the subordinated tranche, the lowest tranche within the warehouse. So we've got our money or our shareholders' money as a first loss provision. So as I said, skin in the game, money where the mouth is, pick the euphemism, also the metaphor that you think is most appropriate. And above that or below that, depends which way you're looking at the stack, we've got a mezzanine funder, and on top of that, NAB. I think probably in about a year or 2 years' time, once we have a little bit more curing of the cohorts within the warehouse, we'll send that into the term market where we'll actually sell it to investors. We're very keen on maintaining the residual position, the equity position in the funding, because essentially that's our business.
Yep, I understand that. Stay with me, Yanir. We'll be back in a minute. My guest this morning is Yanir Yakutiel, founder and CEO of Lumi. Okay, so let's move off the funding of it. The great thing about Lumi, or one of the things you must experience, is you really get access to all parts of the economy. And so where do you think the Australian SMEs are up to at the moment? What's the state of business confidence and, the state of the environment?
It's, with notable exceptions, which are predominantly businesses that are reliant on either foreign tourists or foreign labor or foreign students, the rest of the economy is doing incredibly well. Business confidence is actually at an all-time high. We're seeing that even in industries that people thought were quite hit by the pandemic, especially hospitality. Now, again, going back to data, you asked the question in quite a broad, with a broad brush. If you look hospitality, you need to break it down. Like if you're a CBD, Sydney or Melbourne venue that's reliant on office workers having lunches and sort of business dinners for entertaining foreign guests, you're probably not doing so well. Suburban, outer urban, regional businesses are doing absolutely phenomenally well. We're seeing it throughout the economy. There were a lot of questions as government stimulus was sort of coming down and small businesses were sort of weaning off JobKeeper, JobSeeker, and rent abatement, whether they'll get it directly or their customers got it. whether we're going to sort of face a cliff around March. That didn't happen. And in terms of our originations, as far as we can see, we're going every month for us. Since February, January is typically a slow month, has been a record month in originations. And we're originating at pre-pandemic levels.
Right. Wow, that's great. The other thing which I've been reading up on you, you've spoken before about the side hustle culture in Australia.
Yeah.
And the idea that people have their day job, but they've also got these little passion projects. Just tell me a little bit about that.
Well, I think it's a trend, again, that we're seeing globally. In Australia, for certain reasons, it's a little bit more pronounced. First of all, from a cultural perspective, the idea of becoming an entrepreneur, having your own business, is becoming a much more socially acceptable way to spend your professional life. When I was finishing school, and I'm Israeli, so I had military service in between, but then went and decided what to do in terms of university. And thereafter, my parents, doctor, lawyer, accountant, engineer, right? Get a job, have a professional career. You need to have a profession. That has changed over time. And people, whether at the very beginning of their professional lives or later on, are trying to get more closely align their professional lives and their personal interests. And a lot of times that is creating businesses that are around an interest. So, whether it's around cars or hospitality, wine, etc. And typically these things start as a secondary income stream. And as it becomes more viable, people leave their day jobs and focus on that. And the issue with those types of businesses, that they're very hard to fund.
Yeah.
Because typically the equity funding that's available to businesses like us and other quote unquote startups from external equity investors is really for businesses that have potential exponential hockey stick type growth that is a justifiable risk-adjusted return for an external VC or other equity investor. If you're doing like a small microbrewery in Marrickville or another sort of passion project, that is likely not going to turn into $1 billion business.
Yep.
And that creates an external equity funding bottleneck. Businesses like us, like Lumi, typically we won't come in at the very, very beginning. We're not equity or venture capital investors. But once the business has shown viability after sort of 6, 12 months of trading, we can provide you the working capital that you need to really take the business from something that's nothing more than a hobby that takes a lot of time and makes a little bit of money to an actual business that you can live off and support your family with.
This sounds very much like Fear and Greed, Yanir.
Well, yeah.
I think you're talking our book here.
Yeah, well, like listen, it's an experience shared by many, many people. And I think it's going to continue. And I think, in fact, the pandemic is actually going to accelerate it because people have really focused on lifestyle, moving away from cities, spending more time with their family. They don't want to commute. And
yeah, there's been some great things about the pandemic.
The winners and losers, but if you're a winner, you've done really, really well. For us, it's been a massive net benefit.
Fantastic. So what next for Lumi? Do you keep growing? Do you think you'll list at some point in the future? What do you reckon?
Continue to do what we're doing more, better, faster. So really the focus is on growth. In terms of listing, that is something that we think about and we have in the back of our mind. It's not something that's an immediate plan. Mm-hmm. I think for a business like ours, given that we are quite capital intensive, we should enter the public market at some point. My personal view is, for a variety of reasons, businesses in Australia tend to list too early. There's an appetite here for early stage investment because of the history with junior and speculative miners.
Yep.
And I think as long as you can, it's quite beneficial to stay private for as long as you can. The constraint to that is the depth of the private equity markets. And at some point you sort of hit a brick wall and you really need to go to the public market. We're not there yet. We're just in the process of a raise now, which has been very, very successful. It's transitioned us from high net worth and top end of town family offices to an institutional register. We're continuing in that path. I think the more institutional investors we have in the business, the clearer the path to a listing will be.
Listing at some point. Yanir, thanks for talking to Fear and Greed.
No, thank you very much for having me.
That was Yanir Yakutiel, founder and CEO of Lumi. This is the Fear and Greed Daily Interview. Join me every morning for the full Fear and Greed podcast with all the business news you need to know. I'm Aylmer. Enjoy your day.